So yes, my friends, let's begin our discussion now. After having finished the basics, let's dive into profit or gains of business or profession, a very, very important chapter, as you all know, goes without saying. So without further ado, let's begin, my dear friends. So I'll be doing from my tax verse book, as I told you, but I'll also be doing through my running notes because I'm condensed all these things also wherever needed. So the term business is defined in 2 clause 13. It will include what? Trade, commerce, or any manufacturing activity. So trade, commerce, or any manufacturing activities, anything that we do in life with an intention to earn some money would be deemed to be business. So if you see, profit or gains is coming from where? First is profit and gains must be there, and it should be there of something called income. So income is defined in 2 clause 24. Anything that you think of is defined in income, guys. It includes negative income also, yes. And it should be as per the method of accounting prescribed in section 145. And it can be a trading activity, whether on an individual level or on a community level also. And even losses are covered. Negative income is also income. And it says profit and gains of business or profession. Business or profession. Now, what do you mean by business? What is a profession and what is a vocation? Because profession includes vocation and everything is part of business. So when I say PGBP, it also includes vocation. So simple words, guys, business is a term, wide term. So anything that if I put effort and I get something in return, whether it is in an organized format or a disorganized format, would be called as a business. So you would have going on the road and, in the signal, you would see these street vendors, street hawkers. They would come to you and sell an umbrella. Is that business? Yes. Do you think they have a company? Do you have an entity? No. So is that business though? Yes. So anything, whether it's organized or disorganized, it is called as business at the end of the day. Profession, on the other hand, requires some skill set, either an intellectual skill set or labor skill set. Intellectual skill set is like CA, CS, architect, etc. When as for labor skill set is like a surgeon. A surgeon performing a surgery and getting money would come under profession. Vocation is like your calling. Calling means not phone calling. It's your inner purpose. Let's say your inner purpose is to propagate your religion. Your inner purpose is to probably, speak to everybody about the Bhagavad Gita, for example. So is that also part of the income tax? Yes. Nirmala madam says, whatever you do, if you earn some money, you give me tax. As simple as that, right? So politics is deemed to be a profession. Any social work is a vocation. Preaching Christianity is a vocation, which anyway comes into profession, because profession includes all vocations. And the best part is profession and business are mutually exclusive. If you use the word business, you cannot use profession, and likewise. But friends, all professions are businesses, but all businesses are not professions, because all businesses, like if I am selling an umbrella, that does not include intellectual skill or labor skill. Labor skill means skillful, that is your surgeon. Surgeon, that you cannot say, sir, if I am giving an umbrella, that is also labor. No, what I am trying to tell is skill set with respect to working or skill set with respect to intellect. So if I give a raw diamond to a skilled, jeweler, and that stone maker actually carves out a beautiful diamond, that is definitely a profession. It's not a business, because he's using his ability, his skill set to perform something on that particular rock to make it excellent, right? So that is what it is. All professions are business. All businesses are not professions. Vocation is wider than business. What does not amount to business will be vocation. As simple as that. Everything is covered in PGBP, my dear friends. Now, what is the taxability portion of it though? Right? Taxable portion, is it a capital receipt or revenue receipt? As per many decisions and generally the rule of income tax is revenue receipts are taxable, capital receipts are not taxable. And whether it is capital or revenue, you and I will decide, but the ultimate authority, because many of these cases are all based on what? Whether it is capital receipt or revenue receipt. And it is all done at the High Court and Supreme Court level, because High Court and Supreme Courts are the ultimate judges of what? Questions of law. Questions of fact is done by the lower courts. Questions of law will be decided only by the High Court as well as the Supreme Court. So I think it zoomed out, sorry. So the High Court and Supreme Court will decide what, guys? Questions of law, always. So moving on, the next part of the story is, if I am receiving the profit, when I say PGBP, what is taxed, what is not taxed? If I am receiving some profit, whether in cash or kind, would it be taxed? Yes. If I receive in cash also, receive in kind also, everything will be taxable because it doesn't specify whether cash or kind. What about reimbursement of expenses? Now I am a consultant of the company and I will say I want to, I'll come to your company and do whatever the work is. So 3 days project is going on. I will book my a room for myself and all the expenses of the room as well as my all the food expenses you will have to reimburse. So let's say I'll charge 2 lakh rupees for 3 days and this reimbursement of expenses will be some 20,000. So my taxable income is 2,20,000 or 2 lakh only. So again, many court decisions have clearly told that reimbursement of expenses will not be PGBP. It will not be a part of your turnover. What about voluntary payments, right? Let us say my friend is a lawyer. I have told him, boss, one of my friends is there, other friends who doesn't have so much money. Anyway, you do some free cases. Free cases are called pro bono cases. So why don't you help him out, man? He's in really in bad shape. So my friend who's a lawyer helps my other friend who doesn't have so much, who's not a man of means, who doesn't have so much money, and eventually he will win, right? He'll ensure that my other friend wins the case. So out of happiness, I will gift him something because he did something for free. Let's say I'll gift him a nice gift of worth some 20,000 rupees. Would that be PGBP income for the lawyer? So I, on behalf of my friend, because this guy won the case for him and he did it for free, I have gifted him something worth 20,000. Let's say I've gifted him a phone worth 40,000 rupees. So would that be PGBP for the lawyer? Yes. Guys, here the key word is nexus. Since there's the nexus between the profession or the business and what the fruits of the labor, so to speak, definitely he has to be the PGBP, it will be charged. Similarly, let's say let's say I do a work for some, let's say, film actor, and let's say Rajinikanth. So I do a work for Rajinikanth. Rajinikanth becomes very happy and like, boss, thank you so much for this. Take my watch. So he'll give off his watch to me, right? He'll give off his watch. That watch is worth, let's say, 1 lakh rupees. 1 lakh rupees watch he'll give me. Say, I'm very happy for that. You're not even taking fees. You're like, sir, how can I take fee from Rajinikanth, sir? Not possible, right? So the thing is, he'll say, okay, at least keep this watch as a token of my love. That is also an excess, guys. So will that be counted? Yes, voluntary payments also will be PGBP. Let us say there was an old client of mine. Of course, I was doing work for him, all that, he was paying me, all that. But we also shared a very good personal bond. And let's say since he was very elderly, he always treated me as his son. And at the time of his passing away, in his will, he has written one full property for me, guys. In the nature of a son, he always used to look at me as his son, and let's say he's gifted me his property worth 1 crore. This was one of those cases. It went to court. Is this, what do you think, PGBP? The answer is a resounding no, because there is no nexus between what I got and what I work. For all the work I've anyway received payment for which I've already shown it as PGBP, but this there is no nexus, so that will not come there. So will it be even taxed though? That we will see later. So any gift receipt will be taxed in IFOS, as you know, right? Yes. Then I am a chartered accountant. I'm floating a company, and I'm helping somebody float a company. Because I did a very good job, apart from my fee, I also received shares worth 20,000 rupees. Would that be PGBP? Yes, because there is a nexus. And let's say I worked for some person, he paid me 50,000 also. But let's say I'm working for RCB. And to see RCB lose miserably in Chinnaswamy Stadium, they have gifted me RCB versus CSK VIP box tickets. So that in VIP, very important person, I can sit there and wipe tears after seeing our amazing team win. Okay. Only RCB fans can troll RCB. Other people not allowed. Yes? Cool. Then Swami Nityananda, let's say 5 lakh rupees is given by Swami Nityananda's Bhakta, let's say Ranjita, whatever her name was. So she gives 5 lakh rupees to Swami Nityananda as, taking as token of gratitude for whatever, what he did, God only knows for that. Okay. So now what do you think? That is taxable or not taxable? Yes, taxable, nexus to profession, all these things. But the same, if an employee is getting some car, employee is getting a servant for his, work, household work, employee is getting a driver, guys, all these things are perquisites. These are not taxable in PGBP, but they are taxable in the hands of the employee as salary, right? But if you are working as a consultant, as a contract of service consultant, if you are working, then you will obviously, sorry, contract for service as a consultant, if you are working, then my dear friends, you will definitely get, that will be a PGBP income. Any isolated venture, even once in a year I will do that, that's all. That also will be called as PGBP. What about non-refundable deposit? So guys, non-refundable deposit is a trade receipt which is not taxable as per, many court judgments. Refundable deposit on the other hand, I'll have to take it and refund it later. So yes, that will be definitely taxable under PGBP. If it is forfeited, so to speak, then anything smuggling, business from smuggling also. Yes, any business is taken into account. It says profit and gains of business, any business or profession. So everything, my dear friends, will be PGBP. So the same thing is given in all these things. That is what we are seeing. There has to be something called manufacturing, transformation of one object to another, which is having a different character and use. Method of accounting, obviously I can follow cash system or I can follow, accrual system, but there can never be a hybrid system. And of course, everything I have to follow the ICDS, Income Computation Disclosure Standards. Now, chargeability, charging section is section number 28. So first one is profit and gains of keywords, any business at any time. So even one time in a year, value of any benefit or perquisite, as I already told you. Guys, if it is for an employee, it will be taxable under salary. Any, this thing also, if I have received any gift in the nexus of business, that also will be taken into account. Then, under 35 AD, that is, your specified businesses, there, if you have taken a capital asset, anyway, under that specified business, you will claim 100% deduction for all capital expenditure. Now, let us say that has been destroyed or that has been sold, that has been demolished, whatever the case may be, any money that you receive there will be PGBP, because guys, if you have bought an asset for 1 crore and you have used it for specified business under 35 AD, you would have taken that full deduction in that year anyway. So next year when you are selling it and you are getting, let's say, 10 lakhs from it, that has to be taken as the credit to your P&L account for sure. Then your normal clubs, association and other things, they are principle of mutuality. All of us will come together to do, form a trust, to form a club, for mutual on the principle of mutual benefit society. So in these cases, whatever money I earn, which you give specific services, basically these clubs etc. will have party hall, clubs will have rooms services etc. These services provided to the club member, and whatever profit they make will definitely be chargeable to that particular club, is what they say. Now, any compensation made or payment due or received by any person in connection with termination or modification of terms of a business contract. So, for example, a telecommunication company appointed an agent, Mr. Z, to sell SIM cards both in North Karnataka, whole of Karnataka. Then slowly they changed that, modified that agreement, and they said, you handle only South Karnataka, whereas I will give that other deal to a person from North Karnataka. So, South Karnataka I am handling. I will say, sir, you had given me whole of Karnataka. Now you are only giving me South Karnataka. Please give me some 5 lakh rupees as compensation. That compensation will also be PGBP, is what they say. Apart from that, one part of the story was you are not supposed to, share your know-how. One is sharing the know-how. Other part is what? Not non-compete. So, any non-compete if you enter into, let's say you have a let me give you an example. Let's say you are a person who is creating an additive in a petroleum product. So you are a manufacturer of an additive. You have patented technology. So basically you are selling that additive. You add that additive, the efficiency of the petrol will increase. So Shell petrol bunk, Shell company has bought your additive and they have told you, you cannot use this additive anywhere else. I am exclusively using this. I am taking this entire royalty. I am giving you so much royalty every month, every year. This is the payment that I am making to you. So is that PGBP? Yes, very much it is PGBP. So they'll tell you, you should not compete. You should not sell this formula to somebody else. Yes, non-compete fee, definitely PGBP. Instead of telling that, what they'll tell, they'll say out of 10 crore that I am making payment to you, 1 crore is for non-compete. 1 crore is for non-compete. Means you cannot compete outside, you cannot sell this elsewhere. Then they can tell 9 crore is for not sharing. I am not saying non-compete. They use the words not sharing. Please do not share this with anybody. Guys, whatever the term you may use, non-compete you may use non-sharing. Either way, the lawmaker clearly says whether it is not carrying on any activity or whether it is not sharing any know-how, whatever the case may be, my dear friends, it will be 28(5)(a) PGBP. So, for example, an employee who worked at Marrow, a medtech organization on medical content, was paid 5 lakh rupees to not share the medical content with Unacademy, another online platform. One is you should not work elsewhere. That's called moonlighting. You cannot work in two companies. You cannot work elsewhere. That's okay. As a consultant also. Second part is what? You are not supposed to share this data with somebody. That not sharing also. And if I am giving you that money for not sharing the content anywhere, then also it will be PGBP is what they say. On the other hand, guys, this is when I am taking it on, what do you say, like royalty basis. What if I sell the right only completely, the entire right is transferred, then PGBP will not come. The same will be chargeable under the head capital gains. It is not assessable under section 28, it is assessable under capital gains. These are the things. Apart from that, guys, keyman insurance policy. Keyman insurance policy. So who is this keyman? Keyman is a KMP, key managerial personnel. So that is your, as per Companies Act, it is your CEO, CFO, CS, MD, manager. Then one level below the KMP is also called as a KMP, who has been designated as such. So on the lives of these people, they take insurance. Not just on the lives, also what if they commit fraud tomorrow? So the company, to protect other directors and to protect itself, it will take insurance. They keep on giving insurance premium every single year. Now, is that keyman insurance premium allowed in the P&L account as a deduction is one part of the story. Secondly, after a few years, surrender value they will get. Who will get surrender value? The keyman, the key persons also will get surrender value. Company also will get surrender value. If company gets surrender value, is it taxable? If the KMP gets surrender value, is it taxable? Is the question. As simple as that. Earlier, my dear friends, it was not taxable. Now it is definitely made taxable. How? Insurance premium. I asked you a question. Insurance premium paid by the company. They pay 1 crore insurance premium every year. That 1 crore, is it allowable expense? Yes. Under 37(1) it is allowed, because 37(1) is a general deduction. It should be wholly and exclusively used for business. It should not be capital nature. It should be revenue in nature. It should not be used for personal purposes. So in this case, all the elements are matching. Hence it is what? 37(1) insurance company, it is allowed. On the other hand, surrender value received by the company earlier was not taxable, and even for surrender value received by the employee also was not taxable. Now everything has changed, my dear friends. As of now, amendment has come whereby if you are receiving surrender value as an employee, it is taxable under 16 and 17 salary. If you are receiving as a consultant surrender value, it is taxable under PGBP. If you are receiving as a chairman emeritus, for example, Narayan Murthy is appointed as a chairman emeritus, like honorary chairman position. He is not exactly a chairman of Infosys anymore, but since he started Infosys, is being given the position of honorary chairman. So for that honorary chairmanship, what do you think? Section 56 will apply, IFOS. Basically, Nirmala Madam says, if you are getting money, surrender value of the keyman insurance policy, you please have to pay the amount, no questions asked. And even if the insurance amount earlier, which was, if there is a fraud, earlier any insurance amount received was not at all taxable. Now, also what do you see? Is it taxable or not? We'll see it in a slightly later scenario. So the thing is, section 28 says any amount that you receive from a keyman insurance policy, any sum received under keyman insurance policy, including the sum allocated by way of bonus on such policy. So my dear friends, any amount that you receive would be taxable. Apart from that, there are some incentives and duty drawback on all these export businesses, selling of exim scripts, duty drawback, DPB, DFRC. Guys, this is a marathon session, so I will not be explaining in depth of all these things. In regular batch, FTP, I will explain each and everything, what it means. So basically, any drawback. So if you, what do you say, export certain goods, the government will give you cash assistance. Government will give you duty drawback where the duties will be given reversed back to you and credited to your account. All those credits, my dear friends, will be PGBP. Definitely yes. And which year should I recognize? The year in which I actually receive it, or the year in which it is reasonably, what do you say? Reasonable certainty, I can say that the realization can be achieved. Because when I export goods, money, whatever I get, no, it has to be repatriated back to India within 9 months as per FEMA regulations. Now, that 9 months can be in this financial year also, next financial year also, obviously. Let's say if I'm making a sale in January 2023, the realization will come sometime in September, October 2023, which is the next financial year. So when should I take? As per 145B, export incentive shall be deemed to be the income of the previous year in which reasonable certainty of its realization is achieved. So reasonable certainty of the realization is achieved. Until the realization is achieved, this reasonable certainty. So if I know that it's going to come next year, then I have to take that next year. Now, you are a partner of a partnership firm, my dear friends, and you are getting interest, salary, bonus, commission, etc. So guys, partner is not an employee, right? So what salary will not come. So for him, TDS under section 192 will not come. Any partner remuneration, etc. will be under 28.5. So interest, salary, bonus, commission or remuneration received by a partner of a firm from such firm. So firm is paying some salary to the partner. It will be taxable under PGBP, right? So even though it is termed as remuneration, there is no TDS on partner's remuneration. There are many cases also, because it is, though it's remuneration, it will not come under section 192, because partner can never be an employee of a firm. He's a partner. He is there as a businessman, as an entrepreneur, and what he gets is the share of profit, nothing else, right? On the other hand, when I am making payment of interest, salary, whatever the case may be, if it is disallowed under 40B, because there are 40B limits, my dear friends, under 40B limits, you'll have to either take, the entire 90% of the value or 1,50,000, whichever is higher. After that, in excess of that, you should take something else. All that we'll see later, right? So for that, some technical problem. Yeah. So guys, as I was saying, in 40B, let me show you 40B limits. Yeah, 40B limits, I told you 1,50,000 or 90%, whichever is higher. That is on what? On the first 3 lakh rupees. Book profits. You have to compute something called book profit. Remuneration allowed is only as a percentage of book profits. How much? Either 1,50,000 or 90%, whichever is higher you should take. And on the balance, 60% is what you need to take. So only this part is allowed. Anything else will be disallowed. Anything else will be disallowed. So for example, if what do you say? Book profits is coming up to 4 lakh rupees. Right. So on the first 3 lakh rupees, it is what? 90% or 1,50,000, whichever is higher. So 90% will be 2,70,000. So 2,70,000 remuneration is allowed. On the balance, 1 lakh, how much? 60% is allowed. So 60,000. So 2,70,000 plus 60K is allowed. That is 3.3 lakh remuneration is allowed. Let us say I pay 5 lakh remuneration to partners. What is the excess amount? 1.7 lakh. This 1.7 lakh will be disallowed. With whom? Disallowed to whom? Disallowed to the firm. Since it is added back to the profit, firm has to pay 30% tax on 1.7 lakhs. What does the partner show as his receipt? He will show 3.3 lakhs or he will show 5 lakhs. Obviously, he has received 5 lakhs, so he has to pay tax on 5 lakhs. But guys, firm has already paid tax on 1.7 lakhs. And partner is showing it as 5 lakhs, which also includes 1.7 lakhs. The problem is, if he pays tax on the 5 lakhs, it will be double taxation, because firm also has paid on the excess 1.7 lakh. So that is the reason why this point is there. So much, to cover all these things, only this point is there. If such interest, salary, etc. has been disallowed under section 40B, in the case of the firm, the same shall not be taxed in the hands of the partner to the extent disallowed. So that extra amount of whatever, 1.7 lakhs, if the firm has paid tax, it is not taxable in the hands of the partner. It is not taxable in the hands of the partner. Moving on, guys, next one, conversion of inventory. So, for example, I have a building. Let's say I am Shobha Developers. I am into development of real estate. I have a building in which the first floor here, there are 2 rooms. I will convert these 2 apartments into offices. Essentially what I am doing, I am converting my inventory into, that is, I am converting my stock in trade into a capital asset. The moment I convert my inventory into capital asset, I am bringing it into business as a capital asset. So obviously it will come into the block of assets concept. So what would be the actual cost of the asset is point number 1, that comes for depreciation. But here, what would be the PGBP income? Let us say the cost of the inventory of these both the buildings are 2 crore. But on the date of conversion, the fair market value is 10 crore. What do I do? So the lawmakers have told that the fair market value of the inventory as on the date on which it is converted or treated as a capital asset will be PGBP. So basically, guys, opening stock will be 2 crore, 10 crore is the FMV. So 10 minus 2, 8 crore will be eventually my PGBP income. Though I should record 10 crore in the credit side, opening stock will be 2 crore. So the net effect will be 8 crore will be charged to tax. The moment I have paid tax on 8 crore, obviously in my actual cost under section 43(1), actual cost of the asset, that I have to record it at 10 crore. Depreciation can be claimed on 10 CR is what the lawmaker says. Got it? So that is what they are trying to tell. In case any discontinued business is there, so my business gets discontinued and later after a couple of years, some money that I receive from there, then whatever it is, any sum received after the discontinued business, that also will be deemed to be profit. This is also concept of deemed profit in section 41. So that is the same concept here. Any money that you receive after your business has been discontinued will be charged to tax. Any subsidy received by government. So government grant, cash incentive, duty drawback, anything that you receive from the government will definitely be 2 things. One, if you have bought an asset and against that asset there is a subsidy, it will be reduced from the cost of the asset. On the other hand, if directly you receive for your business any government grant subsidy, that will be deemed to be your income, and that is under 224, that will be your income, right? Got it? But guys, any LPG subsidy, if the government has given and you have received any LPG subsidy, that will not be treated as subsidy. It's just a welfare subsidy given, and hence it is not in connection with business or profession, and hence not chargeable to tax. All these can be MCQ questions or any other thing they can keep asking. Then as far as speculative transactions are concerned, that shall be treated as a separate and distinct business, so to speak, and everything will be done on a reasonable basis. More on that slightly later. Cool. As far as computation of income is concerned, the income is computed under head 3243D. So all the general expenses which is prior to setting up of business. So if you take setting up of business as the criteria. So for example, there are certain pre-incorporation contracts. Let's say the business came into force on, let's say, 10th October. Before 10th October, it was all the incorporation which was happening. That is your MOA, OA creation, legal expenses for various things. All those expenses, will it be allowed? Generally, it is not allowed. But there's an exception, that is 35D, amortization of preliminary expenses. So this section 29 says generally pre-incorporation expenses are not allowed unless otherwise allowed in Income Tax Act. And Income Tax Act has one section which talks about preliminary expenses, 35D, which we'll see later. And what about the profits made till the incorporation? So pre-incorporation expenses, just before incorporation, company is not at all in force. When company is not at all existing, you cannot charge in the hands of the company. Hence, these expenses are not allowed But exception is 35D. Under 35D, you get to amortize 1/5 of the preliminary expenses. But if you have earned any income in this particular time, this income will be chargeable to tax not in the hands of the company, guys, because company is not in existence. When company is not in existence, it cannot be called as an SSE. For you to be called as an SSE, you should be a company. Company means registered under Companies Act. If it is not registered under Companies Act, still in the process of registration, this period, whatever income you earn will be taxed in the hands of the AOP or DOI, that is in the hands of the promoter. So promoters will have to pay tax as a association of person or a body of individual. So this also they can ask in MCQ and all that, how the taxation will happen for the pre-incorporation income that you earn. That is what they say. So if you see embezzlement by a director or an employee of the SEC during the course of business, if the money is taken away by the director and he runs away, can I claim it as a business expenditure? Can I claim it as a business loss? Yes. Expenditure you cannot claim, but you can claim it as a business loss as per a Madras High Court decision. So basically they are trying to tell, after incorporation, whatever you do for the business, that's income or expense, you can claim. And if there is a loss arising out of business, that also can be claimed, even though the loss was, the entire thing was cheated, the cheating or the fraud happened by the concerned director as such. Now, these are all the basics, guys. Till now, what we have discussed is the charging section 28. And of course, section 29, which speaks about the method of accounting and also the admissibility of the expenses and computation of income under 29. Now comes the allowability of deductions, that is section 30 to 36. These talks about whether the, deductions are allowed or not allowed. This is what this section speaks about. Right? So let us go into those areas first, whether the expenses are allowed or whether the expenses are disallowed, and after which we will understand the important concept of depreciation. So guys, section 30 talks about expenses relating to building only, used for business or profession. First of all, it should be expenses. Secondly, it should be used for the building only, not any other asset. Third one, used for the purpose of business or profession. If you use it for any other than building, section 30 will not come. If you use the building for personal purposes, section 30 will not come. And this section only and only talks about current repairs or current expenses or revenue expenditure. It does not include capital expenditure. So three important things in section 30. First of all, revenue expenditure. Second one, only building. Third one, used for the business or profession. Owner cannot pay rent to himself, so it is not deductible. Tenant paying rent is deductible, for him. Obviously, it is deductible under this particular section. Rent, rates and taxes, insurance and revenue repairs. All repairs will be revenue repairs. On the other hand, as far as building is concerned, yes. Coming to repairs, let me talk about other things. Rates and taxes. Municipal rates, municipal taxes paid by owner is deductible by him. But if it is paid by tenant, he also can take it in his P&L account. Insurance also same thing. Capital repairs, my dear friends, in both the sections, for both the people, that is owner and tenant, it is not deductible. As I told you, this section only talks about current repairs. Now the interesting part is, what about revenue repairs? Revenue repairs. So here this chart will help us understand. Building. Tenant, there is an agreement undertaken by him where he has told that I will bear all the repairs. Generally, this should be there in the agreement. If agreement is silent, generally owner only will bear all the expenses, especially capital expenses. All revenue repairs, that is from the general wear and tear. Let us say there is a sink, you have sink suddenly breaks while wear and tear. And for example, electricity bulb bursts because of wear and tear and use. So all these expenses, who has to bear? Obviously the tenant has to bear. So revenue or expenditure allowed by tenant under section 30. As far as the owner is concerned, capital expenditure, that is capital repairs. Let us say a main motor, a water motor, or an electricity motor, or electricity fuse is a different thing. But the entire transformer or the entire electricity board, there is some problem and it's not working. That is not my duty. That is the owner's duty to replace. So capital repairs are definitely not allowed. As far as other things are concerned, revenue repairs, current repairs under section 30, it is allowed if it is paid by the owner. And guys, if an owner only builds one additional floor, that cannot be coming under section 30. For him, it is added to the block of the building. So capital repairs will be added to the cost of the building. Very simple. Now, whenever the act says, the tenant has to undertake to bear the repairs. Is it current repairs or capital repairs? Always current repairs. Section 37(1) also, obviously it comes there, and also section 30 also very clearly tells it is only current repairs. So capital repairs are not covered, guys. Now, this particular section says paid by him. When I say paid, does it include payable or actually paid? That's the question. Generally, whenever Act uses the word payable, it means accrual. Whenever Act uses the word actually paid, it is payment basis. But in this particular case, based on various judgments, when I have used the word paid, it will include both payment and payable also. It will include payment and payable. Some of the rates, some of the sections will be allowed only on actual payment basis as per section 43B. When we come to 43B, we'll link it later. But now, for the purposes of section 30, I repeat, the word paid will be both payable as well as actually paid. Now, tenant revenue repairs we discussed, owner revenue repairs we discussed, owner capital repairs we discussed. What about tenant capital repairs? For example, of the building. I am a tenant of the building. I wanted one more floor. So I will tell the owner, can you please construct one more floor? He will say, Poda, no better work or what? You only construct on your own. I will tell, okay, sir, I will construct. I will construct it for 10 lakhs. The owner will say, you do whatever you want. When you are giving back the building to me, that time we will see. I will settle the dues. But now you please, I don't want the headache of construction. Now the question is, I went and asked Nirmala Madam, I am spending 10 lakhs from my pocket. And you have told in section 30, capital repairs are not allowed, which means 10 lakhs I cannot debit to my P&L account. At least that 10 lakhs allow me to show it as an asset. Nirmala Madam said, how can you show it as an asset? You are not an owner. I said, yes, that's what I'm saying. 10 lakhs I've spent. If you don't give me any tax benefit, how will I build a building? You should do something for businessmen who are ready to take up the responsibility of construction of one more floor. Later, I will settle with the owner later. That's a different issue. 5 years later, 10 years later, or maybe never, because I'll never vacate that place. Many people are there for 20, 25, 30 years and all. So I am asking, at least do one thing, let me add to the building. So guys, a wonderful concept called deemed building has come in, section 32(1) explanation. They have told you, if you are a tenant, you can be called as a deemed owner and it will be added to the block and you can claim depreciation. Readily, you can only claim depreciation. Right? Very simple. Now one more question will arise. Sir, okay, 10 lakh rupees I will take and I will claim depreciation. No problem. Sir, later, 5 years later, that building value was 10 lakhs. Now WDV has become 5 lakhs. Sir, I am selling this entire 5 lakhs. I am giving it back to the landlord. I don't want this building. I am giving it back. He had agreed to settle it. Now he will obviously pay the WDV. WDV is 5 lakh. So the owner tells, okay, take it, 5 lakh. The owner gives 5 lakh and takes over the building. From the owner's point of view, what is it? So many court cases have told, for the owner's point of view, it would be cost of improvement. So guys, in a marathon session, I am assuming that you already know all the areas. So I am just discussing from an overall point of view. And like this, from this point of view, what will happen, that point of view, what will happen, like that. Both if we discuss, it will be very easy for you to understand. In regular batch, we'll go very much in depth, reading the Bare Act, each and every line, why this is paid, why this is payable, all that is different. But here, we will be discussing in a very, very different way. Got it? It's just revision. So I hope you understand, you are revising. So again, guys, capital repairs is a new concept called deemed building. So if you see where the SSE carries on business or profession in a building not owned by him, any capex incurred by the SSE for the purpose of business or profession on construction of any structure, renovation or extension of the building, such capex will be treated as building as if the building is owned by the SSE, and SSE can claim depreciation on the expenditure incurred. Concept of deemed building. Section 30 is about current expenses, that is revenue expenditure on building used for business or profession, whereas section 31 talks about expenses relating to machinery, plant and furniture used for business. Again, this is current expenses. 31 talks about current expenses, machinery, plant, furniture only, and used for the purpose of business or profession. Owner paying rent to itself not deductible. Tenant paying rent. Rent is not covered under 31. So this is deductible under 37. Whereas here rent for the building is covered under 30, not 37. So it will come under 30. Whereas rent paid to machinery, plant, furniture, if he has taken it on rent, deductible under 37. Insurance, whoever pays deductible. Revenue repairs, whoever gets it done deductible. Capital repairs, obviously not deductible. It should be current repairs. If I replace the part also, that repair versus replacement, if it brings about a change in the entire efficiency of the product building, then it is advanced or structural change, that is called as normal, replacement, and that will be added to the cost of the asset. But if it is just for through normal wear and tear, then it will be current repair, so to speak. So what is replacement? Whether it increases the entire value, it should be seen on a case-to-case basis. Now comes the very interesting part, my dear friends, depreciation. In normal traditional method, depreciation is always on a single asset method. But in income tax, it is based on what? Concept of block. So there is no difference between the asset and the group of assets. All the assets will be clubbed together and then will be created in a block. So block of assets is what is taken into consideration. So it is not company wise, my dear friends, it's SSE wise. So basically, if you have many ventures under you, if I am a sole proprietor and I have one, let's say, Agarbatti division and I have chocolate manufacturing division, all the assets of all these businesses should be clubbed together. It's not that for one business separate assets, other business separate assets. No, everything should be clubbed together and then it should be done. So it is not company wise, it is SSE wise. So basically very simple. This is the entire format. Let's see. So depreciation is a reduction in the usable value of fixed assets due to normal wear and tear. It is not the single asset method. It is the, block concept. Block concept. It is based on the class of assets and there are various rates of depreciation, and method of depreciation will be either WDV or it will be on the straight line method. We'll see. Normal depreciation, there's something called additional depreciation also. And depreciation of power sector undertaking, you can either use SLM or you can use WDV, all those things. So the main conditions of depreciation is you should be the owner of the asset. Even if you are a part owner, because the law says you should either own wholly or partly. Even if you are a part owner of the asset, you can claim corresponding depreciation. So you should be, first condition, owner of the asset. Even fractional ownership is recognized. But there are certain exceptions to it. One is deemed building, already discussed. If you are a tenant having a building and it's a deemed building concept, yes, then you can, anything that you incur towards renovation, extension or improvement can be claimed as depreciation. Second thing is, when I use the word owner, should you be a registered owner or should you be the beneficial owner is the question. Registered owner or beneficial owner. So basically, for example, if you are owner of a motor vehicle and it is registered, let's say I have bought motor vehicles, around 7-8 trucks, and I have given it to somebody to run the show. So somebody else is running the transport business. I am the actual owner. But as per the Motor Vehicles Act, it is registered in the name of somebody else. I am the actual owner. Actual owner means all the benefits come to me. I am the beneficial owner. But registration as per Motor Vehicles Act, I did not get it done. I got it done in somebody else's name. There is a proper agreement. Everything is fit there. Now the question is depreciation, who will claim? I can claim, or the other fellow who is using it in the business, he can claim. I am also using it in the business. I have given it to that other person on rent, but ultimately I am the owner. But as per Motor Vehicles Act, registration is in his name. So this issue went to court in many cases, and it was held that, legal ownership is not mandatory. What is mentioned in the Motor Vehicles Act is not at all relevant. What is relevant is beneficial ownership. So who has a beneficial ownership? I have the beneficial ownership. As simple as that. So if you see in Nitish Transport Company Kerala case law, they clearly told that motor vehicle registered owner need not be there. You just have to be a beneficial owner. And even as per ICDS there's a case law, ICDS versus Commissioner of Income Tax, Supreme Court case law. There also they told that registered owner you need not be. You should be a beneficial owner. You should be an exclusive owner. You should have given it for a limited period, and you have a right to inspection. In all these cases, the main beneficial owner had the exclusive ownership of the motor vehicle. He had leased it or given it on rent for a limited period, and moreover he had the right to inspect every time. That's why the court said, yes, it is not the registered owner, my dear friends, it is the beneficial owner. And in accounts you have many things called finance lease, operating lease, and now in the new Ind AS the concept of operating lease, financial lease is not there. Everything is under lease only. Whatever the case may be, whatever the accounting treatment may be, most important to know, depreciation is always and always and always given to a lessor and not to a lessee. So lessee or registered owner will not get depreciation. Depreciation is always for a lessor. That is the most important thing. That is why it's an exception. So it is not mandatory for you to have legal ownership. If you have beneficial ownership, then it is okay. I told you, Mysore Minerals Limited, Supreme Court judgment. In case of hire purchase contract, owner, we will be the owner only after the last installment is paid. However, depreciation can be claimed by capitalizing the value equivalent to cash price from the beginning itself. You can claim, no problem. In case of all leasing transactions, owner of the asset only is entitled to the depreciation. That is, a lessor is entitled to depreciation, even though it may be used by somebody else. Right? So depreciation is for what? First condition is you should be the owner. Second condition, you should use the asset. Guys, it's not based on ready to use. It is based on the concept of put to use. If I have bought an AC and not installed it in the office, I was just lying somewhere. As per Companies Act, you will claim depreciation because it is ready to use basis, a fraction of time. But as far as Income Tax Act is concerned, it is not taken into consideration because it is not put to use yet. It is just ready to use. So basically, it should be put to use and not ready to use. However, there is an exception to this. Certain areas, even if it is ready to use, you can use it. Those are standby equipment. For example, fire extinguisher. Fire extinguisher basically fire extinguisher, what happens? It is based on ready to use concept. Fire extinguisher, actually you should pray that you will never use fire extinguisher. Fire extinguishers are installed everywhere. Is it ready to use? Yes. Is it put to use? May or may not be. It may not never be put to use. So there are certain exceptions. Standby equipment. I have a generator. My entire factory runs on this generator. And if the generator fails, I need a backup. So backup will always be there. Similarly, a server is there. If that server which stores all the data crashes, immediately there is one more server which always constantly keeps taking backup after every 1 minute. So that also will be deemed to be, depreciation will be on that particular thing. So if you see some special points, if any amount, if any expense I am doing less than 5,000 rupees, if I am buying an asset of less than 5,000 rupees and I am disposing it off, for example, so I will claim expenditure. I will completely write it off in the Companies Act. But in Income Tax Act, even if I buy an asset worth 1 rupee, I should add it in the block of assets. So it's all the block of asset concept. Then revaluation concept, in accounting it is different. I will have different revaluation techniques, etc. In Income Tax Act, the entire concept of revaluation is ignored. And as far as put to use is concerned, exception as I told you, generally it is put to use. What is the exception? Standby equipment, fire extinguisher, servicing equipment like UPS generator, etc. Spare parts. Spare parts are always added to the asset. If it increases the capacity, it is capitalized. Otherwise, it is expensed off. So spare parts, important spare parts which are necessary to run the show. Like for example, in a car, battery is there. To fix the battery, there are many spares required, which will connect to the entire ignition. Now, if that only is not there, that will, by inserting a new one, I have to capitalize the same. So these are all the various things to be kept in mind. So is it mandatory to claim depreciation as per Companies Act? Yes, definitely. Section 129 of Companies Act says it is mandatory to claim depreciation. As per Income Tax Act, once upon a time it was not at all mandatory. But explanation 5 to 32.1, explanation 5 to 32.1 has clearly said that it is mandatory to claim depreciation. You have to charge depreciation. That's why basically there were many people who were telling that depreciation may not have been required. Many people were not even claiming depreciation. So the lawmaker suggested that nothing doing, you have to claim depreciation, because you cannot just escape from the concept of depreciation. So explanation 5 was added to clearly remove those stupid doubts that were arising. The removal of that hereby declared that the provisions of this subsection, what subsection? Depreciation, shall apply whether or not the SSE has claimed in computing his total income. I don't care. I don't care in your books if you have not shown. Depreciation is mandatory in nature. So, though usage of assets, so first condition, my dear friend, should be, I again repeat, you should be the owner. Second condition, there are exceptions to that. Second condition, you must use the asset. Active use, passive use. Generally active use, some cases passive use. Third condition, usage should be for the purpose of business. But in some cases, it is even though it is not for the purpose of business, there was a nexus in various cases where they have taken, it's okay. Even if it's not used directly for business, indirectly it's helping in business. For example, a recreation center. Many companies you have seen, there are TD tables, billiards table, then also, a chess and other carom board table, etc. And generally there is an outdoor game area, all those things. This is providing recreation for the employee. Because the employees are happy, they will put double efforts in the work and it will eventually aid business. Point number 1. Second, also, for example, if there's any a temple, if I have constructed a temple, church, mosque, whatever the case may be, these things what? These things aid in, giving peace of mind to the employee. It will also help that person in doing what? In absorbing the faith and becoming happy, being at peace, and then definitely going ahead with his life. So that also, a standby machine is one thing that we saw. And here, usage of asset. You see, a temple or a recreational room is for the benefit of employees and still eligible for depreciation. All these are eligible for depreciation, and that asset must be put to use in the previous year, guys. If it is not put to use, no depreciation. Even if it is used for the part of the year, you will get depreciation. If it is used for more than 180 days, you will get full rate of depreciation. If it is used for less than 188 days, you will get part depreciation, is what they say. So ultimately, as I told you, it should be the block of asset concept. So what are the block of assets? Divided into tangible and intangible assets. Tangible assets will be building, furniture, plant and machinery, and intangible assets will be patents, know-how, copyright, licenses, and franchisees. A very important change came in assessment year 21-22. Goodwill. Earlier, people used to claim depreciation on goodwill. Now they said that goodwill is not at all a intangible asset. Goodwill of a business cannot be considered as an intangible asset. So it will not be considered as an intangible asset because of various Supreme Court judgment. There was a lot of confusion whether to take it or not. Later they said, no, I should remove it from the block completely. So the rates of depreciation and from, intangible block as on 1/4/2020, I should compute the WDV of the goodwill and remove it completely from the block. And what are the blocks, my dear friends? As I told you, what are the rates of various blocks? So as far as blocks are concerned, we have already discussed. These are the blocks. Furniture block, building block, plant and machinery block, patents block. Furniture, it is at 10% generally. Building, if it is residential, it is 5%. Other building, 10%. Residential building means what? Basically, Infosys has a quarters for its employees. Those quarters are maintained by Infosys. So that is called residential building. So that what rate can you claim? 5%. Other building, 10%. Plant and machinery, you have 15% and 40%. Depending on the various cases, and intangibles, patent, copyright, etc., it is at 25%. So this is what the rates are. If it is a purely temporary building, it is 40%, residential building 5%, other building 10%, furniture and fitting 10%, machinery and plant. For motor car, it is, if it is used in the business of like a taxi, 30%, otherwise it is 15%. This 45 and 30 is irrelevant now, you can leave it. Ships is 20%, all other cases it is 40%, my dear friends. And one last thing, windmill bought after 1/4/2014 is 15%, oil well is 15%, any other machinery is 15%. So 40% will be your aeroplane, computer including computer software and all those things. Computer software, again amendment came. Computer software is not at all part of computers anymore. Computer software is now called royalty. Allowed as an expenditure, it is definitely not asset. So two important changes. In intangible asset, which is of 25%, goodwill has to be subtracted completely, whether it is purchased goodwill or acquired goodwill, or it is self-generated goodwill, both should be removed. And as far as computer software is concerned, royalty must be totally excluded from that particular thing. As simple as that. Electrical fittings will include all this wiring, switches, sockets, etc. Computer software means any computer program. Goodwill is not there. What about water treatment system? So Infosys has a separate water treatment system whereby all the dirty water will come out of these toilets, get recycled, and again it is used for beautification, gardening of the entire Infosys. That will include desalination, demineralization, purification of water, everything it will cover. What about this? When I say building, there are, like, for example, 4 buildings here, and I will connect roads, and there is a small well. These roads are also part of the building. This well also is part of the building. Footpath is also building. Everything will be building, my dear friends. All this will be part of the term building, is what they say. So block of assets is tangible and intangible. Right? These are, so in building there are 3 blocks, namely 5%, 10%, 40%. In plant and machinery there will be 5 blocks, 15, 20, 30, 40, 45. Ships is 20%. Furniture and fittings 1 block of 10%. Intangible asset 1 block of 25%. And building, as I told you, will include everything: bridges, roads, culverts, etc. Asset which does not qualify for depreciation, like land, etc., will not be forming part of any block as such. Furniture is not defined in Income Tax Act. Generally understood that anything that provides a proper decoration and anything which provides convenience and comfort is furniture. Machinery is also not defined. Anything which aids in the production or manufacture of a product is called machinery. Now plant was not defined properly before, but what about, I am a company which is also has animals with me, and I'm using animals to transport lots of goods, because these are in mountainous areas, cars, etc., will not go. So you have to carry it on the horse's back or the donkey's back. Mule they call, mule's back. Now the thing is, I'm using it as, is it an asset is the question. If I own a kennel and I sell dogs, never ever purchase dogs, guys, always adopt. I'm just saying, if you sell dogs, there I'm treating animals as stock in trade. So there it will not come. But I'm talking about this, carrying the, load on the donkeys and mules, etc., and horses. What do you think? Is that a plant? So many such discussions had happened. In 36, there was an amendment where they said, when you sell an animal after it is dead, whatever money you get from the carcass, that should be subtracted from the cost of the asset. For example, if I buy a horse for 1 lakh rupees, and once the horse dies, I will sell off the skin for 10,000 rupees. 1 lakh minus 10,000, 90,000 is allowed in the year in which it dies, and when I sell it. But can the horse be used as an asset? No. So 136 was inserted to tell it's a revenue expenditure. Second, plant definition was amended to exclude what? Tea bushes, livestock. See? So plant includes ship, vehicles, books, scientific apparatus, etc. used for the business, but does not include tea bushes, because tea bushes it's separate, livestock it's separate, building it's separate, furniture and fitting is separate. So in a movie theater, what about those nice recliner seats, etc.? Is it a building or is it machinery? Should I claim 10% or should I claim 15%? So basically this also went to a couple of courts, and the courts mentioned that it cannot be treated as a plant, they are still buildings. So in PVR recliner seat, if I sit, it is not machinery, it is still part of the building. So the functional test here, it should be helpful in manufacturing of something, then only it is called as a plant. So if I have a prawn making division or an oyster division, where in a farm I have divided into 4 water bodies and I am manufacturing prawn there, I am growing fish there. In my fisheries division, I am growing fish in these curated areas. Now this, my dear friends, it is not land, mind you. This also is plant, because I am helping it in manufacturing of fish, production of fish. Imagine, these are the questions that they'll ask in the exam, in MCQs, just to trick you. Okay, I hope you understood this, my dear buddies.